Rates live with the mortgage calculator. Today we're going to be pulling up some live rates, and then we're going to be doing a deep dive into 3% down loans. We'll get started here in just a moment. We're just waiting for everybody to jump on and get live on all the different platforms here. We put the chat up on the screen, so feel free to drop a comment there as you tune in the chat. And you can also drop any comments that you have or any questions that you have in the chat as well as we go through our deep dive topic here today. But appreciate everybody tuning in nice and early. We'll get started here in just a moment. Great topic here today. As we said the last couple of episodes here, we're taking it back to the basics this week, talking about conventional loans. I know we're talking about 3.5% down loans. Today we're going to be talking about 3% down loans. So taking it back to the basics here a little bit this week. And it looks like we are live on all the different platforms, so we can go ahead and get started. Please keep dropping comments there in the chat, and also drop any questions you have in the chat as we go through here. So we'll go ahead and take the chat off the screen for now, and we will go ahead and get it started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through some live mortgage rates so we can see what the market is looking like. And then we do a deep dive into a different topic. Today's topic is going to be 3% down loans. So again, taking it to the basics here a little bit. Our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive later into the 3% down loans. But before we do that, we'll go ahead and do what we do every morning, which is pull up the live mortgage rates and see what the interest rates are looking like today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and give it a look.
All right, let me switch my screen and check it out. So I tried to zoom in a little bit more today, but this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today. It is November 8th, just after 11 a.m. Eastern, so all our general programs are live. So we will compare them with a basic scenario here. If you'd like a full breakdown, a full loan estimate of all the itemized fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. So for the demo, as we do every day, we'll set up a basic scenario so we can compare across the programs. We'll set a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We're going to look for the absolute lowest rate we can offer right now, which is typically the request. And we'll compare our programs, our conforming conventional to expanded guidelines, also known as non-QM, and also FHA. Remember, VA and USDA are only for, VA is only for eligible veterans and active service members, and USDA is only for eligible properties. So if you are looking in one of those areas or eligible, let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed. Primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use an estimated credit score of 760 and an estimated debt to income ratio here of 40. So with these settings, as we do every day, let's check out the conventional options. All right, top option here at the top, 6.99 rate, 2.375 discount points at cost, puts the final APR at 7.202, pretty much the same as it was yesterday there, just a touch lower, I believe. So good option for our customers looking for conventional, definitely better than it has been the last few weeks, and hopefully we see some more downward momentum. Now, if for any reason our customer doesn't qualify for one of these conventional programs, typically the next option we want to look at, using the same exact scenario, is an FHA program. So we'll keep everything else exactly the same here in our demo. The only thing we've edited here is FHA, which does allow a little more leniency on credit issues, as well as a much higher debt-to-income ratio. But we'll keep everything the same so we can compare apples to apples here. And best option today is just a touch lower than yesterday, 6.375 rate, 2.125 discount point and cost, plus a final APR at 7.005. So just a touch above 7 here, just a touch above 7.2 on the conventional. So our customer that qualifies for both definitely may want to check out FHA. It is a touch cheaper usually in this example. And our customers that must use FHA, this APR does include the upfront and yearly mortgage insurance. So definitely some cool changes to the FHA programs. Now, where we love to specialize here at the Mortgage Calculator is if our customer unfortunately doesn't qualify for any conventional or FHA program, many other banks or lenders have to deny that customer, but that's where we love to present our non-QM options. So we'll set up the same exact demo here. And this time we will choose our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs using alternative income. So now we have a new option pop up for income. Full doc is what we use for conventional and FHA. That's 2 years of tax returns. So we typically choose a non-QM program, especially if our customer in this example doesn't qualify using 2 years of tax returns. An alternative such as asset related, business bank statement. Our investor options are just for investments, so we'll talk about that in a second. Personal bank statement 12-month is the most popular. That's what we use for the demo. We have RSU, stated, VOE, 1099, P&L, no income, CDFI options. Ton of different variations that we can try. If our customer doesn't qualify full doc, the most popular is the 12-month bank statement. And that's for our self-employed borrowers. Many times our self-employed borrowers are the ones that have some trouble when they put their tax returns in and have various write-offs and may not quite get enough income or just may not qualify at all using their tax returns. So we'll solve that problem by using no tax returns at all, just their last 12 bank statements in this example, to determine a debt-to-income ratio of 40% using just the cash in the bank, no tax returns at all. So typically our self-employed borrowers qualify for much more income using this method and can therefore get that home they really want. So let's check out the bank statement options. All right, cool. This one is a little expensive at the top. As I say every day, some days I can't quote it. Today we can. 7.5 rate, 3.125 discount points and cost. A little bit spendy, but the final APR is better here at 7.637 than some of the other options. So another bank statement option here, a little bit lower on the list, has a little bit higher APR, and you'll see there's dozens of different versions here that may allow variations such as bankruptcies, foreclosures, other credit issues that may have otherwise caused our client to not qualify, as well as different ways to calculate the bank statement income. So there's dozens, if not hundreds of variations here. Please get with our team to find the best one. And let me get back to the pricer here so we can do our final demos for investment properties. So we love to work with investors, seasoned investors, first-time investors. We have some great options. So we'll set up the same scenario as before, 80 LTV, 20% down payment. And we will look for the lowest rate options we have for conforming conventional and our expanded guidelines non-QM. Remember, FHA, VA, USDA do not work for investments, so we'll simply compare these two options. First, we'll go conforming. Everything is the same as our other demo. The only change here is the occupancy. So we can see the adjustments that the conventional programs have added for investments. Nice. Portfolio programs getting beat by quite a bit today. So 7.499 rate, the best option at the top here, 3.375 discount points and costs. Final APR of 7.745. So conventional is back at it. That's why we're taking it back to the basics this week. Before the last couple weeks, the portfolio programs have been a little bit better. You see here it's actually in 5th place today. Yesterday it was in 2nd place. The day before it was winning, right? So just keep an eyeball on these portfolio options that do pop up. If the rates do have some volatility, these programs do stay pretty steady. So definitely keep an eyeball on that, but conventional definitely beating it today. And finally, for our final demo, we'll do our investment property for non-QM. So conventional has some good options today, and this week we've definitely been happily surprised. But our non-QM options are still leading the pack for our investors here. So we'll choose our expanded guidelines non-QM for investment properties, and we have a few options to select. First, we must select income. The most popular income type for investments is going to be our DSCR because it doesn't require any income or employment or documentation thereof from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the property can generate more rents than it has in PITIA expenses for the mortgage, that is a ratio of 1.0 or higher, aka the property cash flows. There's also options for under 1.0 where the property may not quite cash flow monthly. We always put 1.5 here as the highest value the computer accepts so we can see all the options. And prepayment penalty must be selected here on these programs for non-QM investments. 3 years is standard here for these programs, so that's what we do for the demo. We can always select 0. That will limit the programs that show up and does cost more money, but that is an option. And 5 years is also an option, which will again limit the programs that show up, but does save our customers some money if they're going to hold the property. 3 years is the most common, so that's what we use here for our demo. So let's check out the DSCR options today. All right. So I think today is the first time in a couple weeks that the DSCR option doesn't quite beat conventional here. So 7.75 rate, 3.375 discount points, puts the APR at 7.896. So it's been beating the conventional, which was absolutely amazing. Never thought that would happen in our lives, where a DSCR loan would be cheaper than conventional, full doc, right? But it has been for the past few weeks, and today it's only about 0.1 higher. So I'd say still today, 100% give or take of investors that compare a conventional loan to a DSCR loan at the same exact price or 0.1 higher will choose a DSCR option. Now, there are a ton of variations here. If you scroll down, there are some at a lot higher rates and costs. Some of these may allow bankruptcies, foreclosures, other credit issues. Some of these may allow different ways to calculate DSCR income using short-term rents. Some of these may allow mixed-use properties, all kinds of different variations here. So please get with our team to find the best DSCR option for you. And now let me pull up our topic for today, which again, we're taking it back to the basics now that the markets are happily finding an equilibrium, I would say. We've had a lot of volatility, a lot of programs that have been a little bit out of reach, a little bit, I would say, unfeasible, right? So just because the guidelines allow a program does not mean that the pricing and the compliance and everything that we need to look out for as loan officers to watch out for our borrowers is able to be done. So in our examples for the past quite a long while, the conventional investments have been a little bit too expensive to present in some cases. And a lot of times these special products like our 3% down conventional options have been quite expensive as well and been a little bit cost prohibitive. So thankfully, the markets have stabilized. So we want to go over all the basics again this week on all our conventional, FHA, all back to the basics, since we do have our customers that have been kind of waiting to see what the markets do, now can jump back into the markets, and the programs are now very feasible. So 3% down is a variation of our conventional programs. It is something Jose went over yesterday. Obviously, that was one of his examples. So hopefully today we have a couple more in-depth examples of variations on probably the most popular program we have, I would say, for a primary home, right? Primary home, 3% down, pretty much the best deal you can get. But a lot of our programs are set up so that this is a great program for our qualified borrowers. Usually our first-time home buyers, but that is a pretty broad spectrum there. And there's a few other ins and outs. So, Jose, I'm sure you got some tricks up your sleeve. So, are you ready to rock?
Absolutely. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. For our back to the basics now, we're seeing downward movement in the rates it's nice to say there's downward pressure, right, as opposed to upward pressure. So hopefully we will see this trend continuing. So that does allow now, obviously, pricing for our high LTV loans, which tend to be the ones most affected by interest rate volatility, because the higher the LTV, if you remember now, right, from our trainings, two different trainings we've had uh, recently, the higher the LTV, the higher the risk, right? Interest rate risk. So that is compensated for by raising the rate on those higher risk products. So we're seeing a reversal of that trend, and also we have some options that are for that have preferred rates. So the one thing I will state is that all 97% LTV programs are for first time home buyers only, right? The 97% option. Now, we do have our Home Possible and Home Ready, which are two of the options that I will display today as great 3% options. But I will note that at a 95% LTV, you do not have to be a first time home buyer to qualify under Home Possible or Home Ready, which does have reduced interest rates and reduced mortgage insurance factor. The only requirement would be income based restrictions, 80% or below the area median income, also known as the AMI, unless the property is in a minority census tract or a low to moderate income census tract, in which case then the income restrictions are removed so that there's additional economic development in those areas. So, but 97% with those programs, as with our standard first time home buyer program, you do have to be first time home buyer for the 3% down option.
Before you
And
redo the examples, can you define first time home buyer? Because a lot of people don't know what that
absolutely.
means. Okay.
Um, First time home buyer does not necessarily mean first time ever in their life, right? So let's get around that situation. It means, if you'll note in the declarations, page 4 of the application, or it does state, it asks, have you, do you currently own a home, or have you owned a home in the last 3 years, right? If they put yes, they've owned a home or currently own or have owned a home. Let's put it this way. If they've owned a home in the last 3 years, they're not considered a first time home buyer. If they have not owned a home in the last 3 years, 36 months, right, from application date, then they are a first time home buyer and they would qualify for, theoretically qualify for any first time home buyer options, including Home Possible, Home Ready, or any of the other DPA options like Homes for Heroes and some of the other options that are out there sponsored by states, counties, and cities, right? And these 3% down conventional options can be paired with community seconds, right? And then you could have a very favorable situation there where you have down payment assistance from the community second. So any of these Home Possible, Home Ready programs can be combined with any of those. You would just have to work with the investor to make sure that that's done. But that usually gets done as a seamless, integrated process with those community seconds. Pretty easy on those. So, but for those, you do have to be first time home buyer in the definition, right? So, the other thing that I will note that these options are they are available for refinances, but only rate and term, not cash outs, right? They're not going to give you these options for cash outs at reduced rates nor reduce MIs, rate and term refis, but it's pretty good option for a rate and term refi. One other thing I will note, this is very important in the home purchase market, in preparation to make the borrower a good, borrower to be out there with their pre-approval, you should consider in the tighter markets of inventory, always provide a conventional as well as an FHA pre-approval, but mainly the conventional pre-approval usually is going to be a little bit more favorable for whatever reason when we're out there negotiating and presenting offers. So the only difference is that on these 3% down programs, your LTV is going, I mean, your DTI, excuse me, is going to be limited by AUS, to the maximums that you're usually going to get, which is, no more than 50%, 49.99999 on your best case scenario, strong credit borrower. Uh, Whereas FHA, obviously 56.9, which is the one benefit, but you will have a lower overall loan amount on the conventional loan because no upfront mortgage insurance, and you're going to have, and it is the lowest down payment option of all. So, very good option for our borrowers. So, our first option here is our standard 3% down. I say standard because it's not home possible, not home ready, and not home one, which that's a tongue twister, which is a Freddie Mac option. So this option, no income restrictions on this, but no reduced MI either. Still good rates, as you'll see here from when I show you the other examples, because this one, 7.624, a little bit of a lender credit, which is always a positive thing to have on our 3% down loans. And you can buy that down to 6.875. Now, as I always like to state when I'm doing these, this is pretty close to what would be compliant for borrower paid loan discount, but as is usual in these 3% down options, sometimes you get seller contribution. So any seller paid loan discount would offset your compliance test. So there are rates lower than this. If you do have seller contribution to pay some of the loan discounts, you can go into the low sixes for this product. So now we have our Home One product. This is a Freddie Mac option for first-time home buyers only. This option does not have an income restriction. So, but you'll see the rate is it's pretty much exact what the other one was. But this one is Freddie Home One. The other one was a standard Fannie 3% down. Now I want to show you the Home Possible. So now you see here, Home Possible, our rate sheet offers a few more lender credit options, which is nice. We can go at 8.125. We got lender credit over 1%. So that represents almost $5,000 for our borrower here of additional assistance with their closing costs, right? So let's say you can't negotiate seller credit. You got to give that full price offer to get the deal. But due to it being a favorable sheet here, we can offer 8.125 and give the borrower almost $5,000 assistance with their closing costs. Or they can buy it down to 6.75 at cost of 2 points, whereas the other option was 6.875 at a cost of 2.375. So if we're looking apples to apples, 6.875 cost 0.625 in cost lower using Home Possible than the standard or Home One option, and the MI is also, the factor is lower. The MI factor, I believe, is 0.3 as opposed to 0.35. Now, our home ready option, we do have good action going on here. Look at that. 8.125 gives us $6,548 lender credit. That's music to my ears, and to our low down payment borrowers. That could cover, depending what your insurance expense is in your part of the country where that loan is being originated, that could cover almost your whole closing right there on this deal, 65.48. And you can buy it down all the way to 6.625 at a cost of 2.5. And our last option, we love our house hackers. We always try to enlighten them with opportunities So if you are buying your first home, or first time home buyer, let's put it that way, that you qualify for this program, hey, why not max it out and get a 4-unit property? Because 1 to 4 unit, no loan level price adjustment. You heard me correct. The full 97% pop, no loan level price adjustments for a 4-unit property. So you're still going to get that amazing 8.125 with a $6,548 lender credit, right? For your 4-unit purchase is amazing. So there are plenty of opportunities out there. So 2 to 4 unit home ready or home possible, 3% down is an option for primary residences. So when you are looking out there, don't blow that first home purchase opportunity and try to get a 2 to 4 unit if at all possible in your area.
All right. Doesn't look like we have any questions today.
We have one question pop in. It looks like someone was asking about EG New. That's just the program name. So we have hundreds and hundreds, actually over 5,000 total loan programs. That just means it's probably a new program that just popped up, right? So that's why we love doing this show. That is our outlets letting us know that there's a new option out there. So some of those programs are coded with new. So good question. Thank you, Neil.
All right. Well, make sure to tune in for the rest of the week because, again, we're going to keep taking it back to the basics this week. Remember, we do this 11 a.m. Eastern every weekday, go through the live rates, and then do a deep dive into a different topic. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.